people started recording transaction because money came in. Then the human mindset, human became little bit different. Those days human are very good, but actually that first murder took place in the very first time of invention of human. No? I can't say those days human was very good. There are good and bad people.
A bit jealousy.
Yeah.
Habil and Habil.
Yeah, exactly. So that's when the murder started. But until the money as a unit of measure came into world, the stingy mind of human being was not there. They are a bit more generous. But once the money has come into being as a unit of measure, people are a bit more stingy. Then they needed to keep everything recorded. Then the transactions are started recording in those means of media, leaves and skin and trees and bones, walls, like that. But then little by little things are more developed. Technology developed one side, society, culture developed another side, the reach also developed, and even the globalized transit. People started sailing. Those days only mode of transport of another country through ship. So they started sailing. So they have gone to another country, and then it's like that the things have become more complicated. Then for people to have business, they need to have those transactions to be recorded. But those recording, there were no method of doing this. You can record the transaction as you like. He can record the transaction as he like. Likewise, we all have our own method. Things come into my mind, I will do it. Things come to his way. Okay. And more importantly, the record that I have recorded, I'm not going to show to you. It is only for my personal reference. So I can record any way I like to. But later, this business became regularized. Now, if you open up a business, then there is a municipality, there is commercial industry office, there is a government office. So you can't just open office, you need a license. So then when you submit application for license, then there is so much of procedure. Maybe one procedure is, we need to see the accounts. So the accounts needed to be written in the right way and to prepare some reports. So collective individuals in that individual villages, they have developed a method. You need to, so I need to prepare profit and loss account. So there should be sales, there should be a cost of sales, there should be expenses. This should be recorded in the way, this is the profit or loss. So people started recording it. But later, one report prepared in one village, for example, one city, in Maidar, this needed to be used in Doha. So, the locals who live in Maidar prepare the accounts the way they like to, and they take that and present to the people in Doha. Will they understand the method that they have prepared here? They will not understand. So then what they have done, country to country, they develop their own standards. If you prepare accounts in, for example, in Bangladesh, entire Bangladesh, there is only one method of preparing accounts. If you prepare accounts in Sri Lanka, same story. If you prepare accounts in Qatar, same story. So, then country to country, their own regulations came up. They developed their own set of rules and procedures if you to prepare one set of accounts. So, a man prepare accounts in Maidar, taking that and going to the bank in Doha and giving that to them, they will easily understand. Because only one method. Later, transaction has gone to the next level, international. I prepare one set of accounts in Qatar, but I need to take some loans from US. So I need to take this statement to US and request a loan. So the man in US need to read the financial statement and he need to understand. So the local rules not only is only not enough. Then the next level, international requirement came in. That's when requirement of international financial reporting standards came to world. Some like-minded individuals internationally, some people from UK, some people from US, some people from Germany, some people from India, Pakistan, Sri Lanka, Middle East, collected maybe 20, 30, 10 like that. They sit together in one room, they developed these standards. And the entire standards body is known as International Accounting Standards Board, IASB in short. That's the name of the body. Who is responsible for issuing financial accounting standards? Originally, it was International Accounting Standards only. First, then they issued, later that became International Financial Reporting Standards. The reason is, those days, accountant's job is just simply to calculate numbers. Now, accountant job is not only to calculate numbers, even to interpret the result of the numbers and to write the report and give it to the users to say that your numbers telling this. So you are not simply an Excel sheet. You are an individual having brain and having an intelligent thinking. So the result of that number you interpret and give. So they issued standards accordingly. So originally they were International Accounting Standards, in short IAS. Later International Financial Reporting Standards, in short IFRS. That's what the two different set. IAS there were 41 and IFRS as of now 17. Of that 41, not all IAS are now exist. They removed, but IFRS is keep coming. But for F3 level, in our syllabus, only some IAS and some IFRS we need to study. The rest goes to the next levels of studies. Is that clear? This story is very clear.
So what you told now, IAS is overcome by IFRS.
Overcoming. So we call it superseding.
Superseding. So in that sense, why do you want to refer IAS?
Still some IAS is still valid, but not superseded by them yet. For example, there is one standard known as presentation of financial statement. That is IAS 1. That is still there. Cash flow statement, IAS 7, still there. So we can't refer IFRS. We need to refer IAS only. But consolidation, for example, we will study later. That is IFRS 3, IFRS 10. So there was used to be IAS, that's gone, colors. So that's the lifestyle of all.
By the time IFRS forms, this will be deleted later?
Yes, time to time they will supersede. For example, recently there was one standard called leases, IAS 17. Now they came up with IFRS 16 and IAS 17 gone home.
Lease liability.
Yeah, that is not in our syllabus. That is in the next syllabus. So that's how it is. So you see here, national local legislation. That's what I talked about, our road country. For example, if you look into Sri Lanka, we have our Companies Act, Qatar Companies Law. Okay, so we need to follow them also. And accounting concepts and individual judgments. There are so now. In the very first class, I talked about building a house. There was some building structure which is not seen to our eyes. That is foundation. So in our accounting building, foundation is accounting concepts. Business entity concept, going concern concept, accrual concept, business, materiality concept. There are so many different types of those type of concepts. So those are known as concepts. That also in building our financial accounting practice. So accounting standards. Now, this one, International Financial Reporting Standards Foundation. That is what the major big body. They are like a non-profit making organization. Their job is simply to look into accounting affairs of the world. So they are IFRSF, International Financial Reporting Standards Foundation. So that is the big one. And that big one has trustees, appointed members to the IASB, IFRIC, IFRS, AC. What is IASB? International Accounting Standards Board. What their job? Issuing IFRS. And what is IFRIC? International Financial Reporting Interpretation Committee. To give a very simple example, we have Quran and Tafsir. Quran is an authentic book. No one can challenge. Correct? It came revealed from Allah. Now, somebody written Tafsir. Tafsir is written by whom? Is Allah sent us? Some human being written. But what they have done? They have explained the Quran for people to understand in a much easier way. Am I right? Same story. This is IFRS is the authentic rule. So when you read IFRS, you may not understand. In that case, you go and read this. International Financial Reporting Interpretations Committee. Every single standards, they will come up with explanation. But the problem is, if the standard is 2 page, this will be 30 page. So then if you start reading that, you may go mad. So it's better off reading only standard and leave. And this one is International Financial Reporting Standards. I forget the full name. Let me tell you.
Advisory Committee.
Advisory Committee, exactly. Advisory Council. So they are one subcommittee. They are one subcommittee. So this subcommittee is to advise on the development of the standard. Okay. Now another point is how we develop the accounting standard.
So this is called Ijma Qiyas.
Ijma Qiyas.
Correct.
What is exactly Ijma Qiyas?
After this new future things coming by corporate deciding how to give us fatwa.
So exactly, maybe. So now advisory committee job is, now let's now try to understand the development process of standard. Today I come to office. I'm working on one transaction. It's a bit of a complicated transaction. I don't know the correct accounting. Then I call you, brother. There's one transaction I don't understand. I consider you are in a practice, so I call you. Then you also cannot find out the answer. You talk to him. He cannot also give you the answer. So we in this group, we tried our level best. We don't know the answer to that. Then we take this to the next level. Maybe we call in Qatar some accounting big organization. Here we have the QCPA. Do you know QCPA? So we go to them. We say that, sir, I found this transaction, but I don't know exactly how to record in my books. I don't know the double entry. Please tell me. So they also don't know. Then they contact the next level, region, maybe Middle East, some accounting body. They also don't know. Then they go to the international level. They come to these people. Then they say that there is a problem. Now they write that problem and circulate to every large community. There is a problem like this. What is the solution? So they will get the solution. Now that will be the answer to this transaction. Then they will write the problem. They will write the answer, and they will send this to a huge large community, asking, we have written a problem. We also written the solution. Please tell us, you are happy with this or not happy with this. Maybe they will send it to 20,000 people or 50,000 people. Do you generally think when such a communication comes, everyone will respond? Somebody just put it into dustbin colors. So, Then they will wait for the response. So this document is known as exposure draft. ED. Once the exposure draft is circulated among the larger community, then they will receive response. Then with the response, this team will sit in the boardroom and again have a brainstorming session. This is correct, that is wrong, or no, this need to be added, that need to be deleted. Like that, they will have a discussion. Then they will fine tune the answer to that problem will come. Now then again they will circulate to a smaller community. And they will say, please go through this. Who are the members? Accountants, auditors, teachers, finance professionals, corporate finance people, bankers, like these big professional people, they will send. They will ask answers from them. And they will wait for the response. Once the response comes, now even the response will be also smaller. Again they will go to this boardroom and have another brainstorming session. They will finalize that document, and that document will become accounting standard. Understand me? This is the process. Exposure draft. Then the second document is known as discussion draft. Discussion draft. Finally, accounting standard. Clear? So,
This is normally how you passing a law,
Yes.
statutory law. Bill goes to the discussion, then it's the final law.
correct. If you see this diagram, IFRS Foundation is like a trust case. Then you have IFRS Advisory Council, then International Accounting Standards Board, and International IFRS Interpretation Committee. And these lines have different meaning. This, they appoint them. 1, 2, 3. And this, they report. They report to them. And this, they advise us. See? This Advisory Council also sometimes advises to them.
So this IFRS has a physical location?
Office is there, yes.
Physical location.
I think in Boston. Boston and England. Boston in US, right?
Boston, US.
Yeah, US. Yeah, Boston.
And in England, both. UK is the main head office actually, and that is the commercial something.
So the main body becomes IFRS F, not IASB.
IFRS, without it.
Yes.
This is a foundation.
Yes.
But the document name is International Financial Reporting Standards class. So now, what are the role of IFRS? It should be recognized. When to recognize? Now, when we study, you will understand. For example, when we study property, plant and equipment, fixed assets. How can you recognize this is a fixed asset or not? What is the condition for me to say that this is a fixed asset? That is recognized. Then measured. How much I can take? 10 real, 20 real or 100 real? Based on what condition? And third one, presented in my financial statement where I will show this. Fourth one, disclosed. What are the notes I will write? All these we will discuss under each IFRS. Okay. What's the time now?
B6.
6:05. 6.
Let us pray.